Namaste. Good morning. Friends, amendment lectures. I'll tell you the plan of action before progressing into amendment lectures. Actually, the number of amendments is less but intense in some areas. Okay. Being a student who is going to write May attempt, we have the real advantage of getting amendments question to a larger extent. The trust related amendments should give us somewhere between 4 to 5 marks. Updated return, okay, and some assessment procedure related amendments should give us another 5 marks. TDS, TCS should give us another 4 or 5 marks. Plus all other areas put together. So somewhere around 20 marks, I think amendment will be targeted. Somewhere 20 marks amendment will be targeted with the AAR as the only, that is Advanced Ruling Authority becoming Board of Advanced Ruling. Okay, that being the only big amendment in international taxation. Otherwise, some central government limitations, etc., on transfer pricing, and there is this amendment of eligible fund manager in section 9A. Little amendments in IFSC related stuff. So, with regard to international taxation, amendments are except BAR, Board of Advanced Ruling. Otherwise, little ignorable amendments only. So, the major part comes from direct taxation part. So, 20 marks is what we are targeting. How I am targeting this 20 marks is I am planning to complete it in 4 lectures, but maximum 5 lectures of amendments. And I'll try to complete it on Thursday itself. There are only 2 bottlenecks I have. One today, I have to, that's why I put in the group that today I'll close between 11:30 and 12 because of Amavasya day. I have to go and complete my, because from morning 6 I have my classes. The second is that bottleneck of my throat. Okay, that's why many times 2 students pinged me, can we have it as 2 full days? But my throat will not permit. That's the only problem I am having. So I said, no, it is not possible. Some students asked me whether the classes can be in the morning instead of, I still have some May syllabus left for my inter students. So morning classes are not possible. But I assure you that I will give the recordings then and there to you for you to, and it will be open recording. That is for those who are not attending. For those who are attending, there is nothing like attending in the classroom, listening live. So continue this 4-5 days. So in this 4-5 days, maximum 5, but I will try to do it on 4 days. Let us target this 20 marks. Let us target this 20 marks. Then comes the revision lectures, okay, which will be almost half a day, which will be from morning 6 o'clock to 12 o'clock. I am planning it in mid-March. Okay, similar date I am trying to plan, that is between 20th March to 27th. That will be a 7 or 8 days lecture of approximately 50 hours of lectures, which I am planning to do revision. Okay, there I will also ensure that we are working only from the examination perspective. At that time, we will again touch upon amendments. By that time, RTPs and other things would be out. If there is anything new, we will touch upon that. With those things, this series of lectures plus revision session should ensure that you safely cross the ocean of direct taxation. Direct taxation will not be your problem. I assure you that. Okay. Last time exam la kammiya vandirkalam, last attempt la, see, all said and done, sometimes correction, sometimes various other things, but let's remove the fear. Direct taxation will not be a problem, and this time it is all the more very clear where the questions are going to be. Let's start the review amendment session. As the sessions goes by, we will discuss the other things. I have the material posted to you in your WhatsApp group. Okay, and I will ensure that on a day-to-day basis the material is posted so that you are very clear, and I also will give you a consolidated material on the last day of the lecture. It is enough even if you follow the screen. There is one big amendment in rates of taxation. There are a couple of amendments in rate of taxation. One big amendment in rate of taxation is long-term capital gain, general LTCG. Okay, till last year, general LTCG was not under the lesser surcharge purview. If you look at our surcharge rate, first I am talking more about individuals, AOPB, okay. If you look at our surcharge rate, okay, we have the surcharge rate as 10%, 15%, 25%, 37%. These are all the 4 surcharge rates that are available to us. But this 25 and 37% is not available for 111A, 112A dividend income. For these categories of assessees, only 15% is the rate of surcharge till last year. Included in this is 112 also now. That is general long-term capital gain, other than those which are for STT is paid, also is coming under the maximum surcharge limit of 15%. They will also be excluded in computing that limit of 2 crores or 5 crores as the case may be. That is the first major amendment that we should remember in terms of surcharge, in terms of rates of taxation. Okay, the surcharge level, there are changes in this Finance Act 22. Total income is more than 50 lakhs, less than 1 crore, 10%, 1 crore to 2 crores, 15%, where the total income, other than dividend income, income taxable under 111A, STCG on which STT is paid, 112A, LTCG on which STT is paid, and 112, that is general LTCG. Okay, is more than 2 crores but less than 5 crores, 25%. Similarly, on these 3 things, you cannot exceed 15%. Here also 15% other than this. So the major first change that happened is on the surcharge front, 112. Am I clear to you? Am I clear to you? Okay. Please also have a notebook on hand so that quickly we can write down wherever important, whatever is important, we can quickly write down. Again, on the surcharge, completely on the surcharge front, there are changes. Please remember, on surcharge front, there are changes. The next important thing to understand is surcharge of AOP. AOP is an entity which can have all persons as members. There can be firm which is a member. There can be individuals who are members of AOP. All people can become members of AOP. Suppose if AOP is taxable at slab rates. AOP is taxable at slab rates, we all know. Whenever AOP is taxable at slab rates, the surcharge are these things. Okay, since AOP is taxable at slab rates, the surcharge are these things. This is for individual, HUF, AOP, BOI, artificial juristic persons. For them, these are all the rates. Remember, where AOP only consists of companies as members. Where AOP does not have a firm, does not have individuals, does not have any other person. AOP only has company as members. ஒரு கம்பெனியோட surcharge என்ன? What is the rate of surcharge for companies? Where the total income does not exceed 1 crore, nil. Where the total income exceeds 1 crore but does not exceed 10 crores, 7%. Where the total income exceeds 10 crores, 12%. Okay? But asking though that AOP to pay tax at 37, surcharge at 37% or 25% becomes little difficult. So the law has been amended from assessment year 23-24. Surcharge for AOP with all members being company is also restricted to 15%. Is also restricted to 15%. Okay, surcharge level changes only we are speaking. Okay, in surcharge level, for surcharge of AOP with all members, only companies as members, the maximum surcharge should not exceed 15%. Am I clear to you? Am I clear to you? Okay, if you have closely followed the 23 budget also, our government's thinking and our finance minister's direction is that we are trying to integrate cooperative society with company. Now, in the present budget, that is, though it's not applicable for you, but in the present budget, they have said if cooperative society which is only involved in manufacturing, 15% will be the optional rate of taxation, provided they are ready to forego all the deductions and benefits. So they are integrating cooperative societies along with companies, along with the company. So a similar thing happened in surcharge also. Cooperative societies opting for normal rates also, the surcharge is 7% and 12%. Cooperative societies opting for normal rates, income up to 1 crore, no surcharge. Income exceeding 1 crore but less than 10 crores, surcharge is 7%. Income exceeding 10 crores, surcharge is 12%. Surcharge is 12%. Are we understanding this? Are we understanding this? So, இது வந்து தப்பா புரிஞ்சிக்க கூடாது. This is not for special rate. Cooperative societies which are taxable at normal rates. Companies which are taxable at normal rates. Just now you told me the surcharge rates. Okay. It is also 7% and 12%. The same is also applied to cooperative society also. In this year budget also there are changes for cooperative societies which are made. Which means we are trying to map a cooperative society with that of a company. Okay. Whereas if you are opting for optional tax regime, the surcharge is going to be 10% across various streams. Okay. This apart, for a company, there is no amendment as such, only that year keeps on changing because now it is turnover of the financial year 2021. Okay. Why 2021? Because that is the fully completed year for which audit would have been completed. On 1st April 22, I should know my tax rate. Then only I can pay the 15th June installment. Okay. On 1st April 22, if I need to know the tax rate, 21-22 turnover will not be an indicative factor because audit would not have been completed. Auditor தான் turnover சொல்ற மாதிரி. But okay, குறைன்னு வேணா சொல்லுவாரு. ஓகே, பட் considering all things being realistic, okay, 2021 turnover will be the most thing. So அதுதான் இங்க amendment தவிர there is it is not an amendment of rate or other things. The moving year from 1920 to 2021, that is what has happened. Am I clear to you? Okay, right. Let's work some questions to just get the hands wet on surcharge and the amendments of that. Question number 1. LTCG on sale of jewelry. Okay, it is it follow the screen, that is more than sufficient. Okay, LTCG on sale of jewelry 42 lakhs. This is taxable under section 112. Dividend income 21 lakhs. Dividend income is not taxable at a special rate. It is taxable at a normal rate, but the surcharge is special rate, or it has a limitation. STCG on sale of land, it is taxable at normal rate. Yeah, this is not 111A. It is taxable at normal rate. Business income 2 crore 80 lakhs. Okay, right? Padiratri type of chapter da irukum. Compute tax is the question. Okay, right. I want to work out practically for all amendments also. Okay, for practically for all amendments, it might not be a standalone question, but it might be part of the main question, etc. But practically, I want to work out all amendments individually, some questions, so that when you come for the revision classes, it will be holistically. I will tell you how this adjustment can come in a comprehensive question. Sir, March. Same dates I am planning to do it in March.
That also will be transferred in YouTube.
Yes, sir. Sure. Business income 2 crore 80 lakhs. Capital gains STCG I originally meant it's an individual only, friends. Okay, it's an individual only. Okay. So on 3 crore 24 lakhs, okay, 3 crore 14 lakhs into 30% plus 1 lakh 12,500. Repeating, 3 crore 14 lakhs into 30% plus 1 lakh 12,500. On the first 10 lakh, 1 lakh 12,500. We understand that the income other than LTCG and dividend has exceeded 2 crores. The income other than LTCG, because these two has exceeded 3.03. These two has exceeded 3.03. So obviously it has exceeded 2 crores. So the special surcharge of 25% is applicable for business income and STCG. Whereas for LTCG and dividend, the maximum surcharge should not exceed 15%. First, we should do for those things. For LTCG at the rate of 15%. So, this 8,40,000 into 15%. Next, for dividend income at 15%. For dividend income at 15%. Do you know how to calculate that? How? Solunga sir. Do you know how to calculate that, friends? Propose 95 lakh 32,500 is for 3 crore 24 lakhs. What is for 21 lakhs? Repeating, we should try to proportionately find out what is our dividend tax, because LTCG on which STT is paid, STCG இதெல்லாம் தனித்தனி அமௌண்டா நம்ம கிட்ட இருக்கும், because these are taxable at special rates, whereas dividend is taxable at slab rates. We will not have it separately. We need to segregate it. So 95 lakh 32,500 divided by 3 crore 24 lakhs into 21 lakhs, the whole into 15%. The whole into 15% is the dividend surcharge. Repeating, this is for this level of income. What is for 21 lakhs? This into 15%. Just check it out whether you understood any, or if you want an explanation on any part, let me know. Examல tension எங்கெல்லாம் வரும் அப்படின்னா, we will do this correctly. we will do this also correctly. ஆனா ஒரு வேகத்துல என்ன மைனஸ் பண்ணுவோம்னா 1 crore 3,72,500 minus 6,17 போட்டுருவோம். No, it is 95,32,500 minus 6,17. Examination tension will make us to do some mistakes which might look very what do you say, but the tension will make us do that, because we would have added here as 1 crore 3 lakh. It is better not to add also, fine with me. But in examination tension, suppose you have added it at this level and inga போடும்போது please be careful, because even this you will do it rightly. After that we have done that rightly, and the slackness வரதுனால we might sometimes do 103 minus, no, it is 95,32,500 minus 6,17.
Can you scroll up a bit?
Yes, sir. You want the total income? You're clear? You're clear, right? Shall we move on, friends? Is it visible? You can come here. Shall I move on? Okay. If in the same question, instead of 280, it is 480, how will our answer change? Because the surcharge rate will become 37% of 480 போட்டாலும் is 480 is surcharge 37% வருமா? ஆமாம், because I should not only see 480, I should also see 23 lakhs income other than 112 dividend income 112A 111A. This is so 4.80 plus 0.23 makes it 5.03. Yes, it goes to the next level, so surcharge will be 37%. Quickly complete, please. Quickly complete, please. Is it visible? You got it? Shall I move on? Shall I move on, friends? I have to also tell you that to a larger extent, I am following the same order our amendment material that is being released by the institute. Okay, so I'm following the same order only here. Question number 3. Shall I? Yeah. The turnover of a domestic company is as follows. Financial year 1920, 2021 and 21-22. The business profit as computed under the income tax law is 6 crores. Compute the tax payable. What will be the rate? 25%. Because I should look at financial year 2021 only. I should look at financial year 2021 only. Okay. So it will be 6 crores into 25%. And the surcharge will be 7%. Okay, income exceeding 1 crore but does not exceed 10 crores, and then finally add HEC at 4%. Am I clear to you? Am I clear to you? Okay, I'm not going into the answers. You can just make a small marking of question number 3.
Soft copy of that publication.
I think I have put it in the group already, sir. I have put it in the group already. I will give you the consolidated soft copy on the last day of the class. Shall I progress? Shall I progress? Okay, right? This is simple. Just to tell you that which year to remember. Question number 4. Do you know what is the basic exemption limit of a cooperative society? Do you know the tax rates of cooperative society? What is the basic exemption limit? 10,000. Okay. Please remember, for a cooperative society, the rates of taxation, okay, are up to 10,000, 10%. 10,001 to 20,000, 20%. More than that, 30%. More than that, 30%. So right from rupee 1, they are taxable. It's like a company. I told you, now you have to equate it with a company, but only that smaller cooperative societies pay lesser taxes, 10, 20, up to 20,000. So 2,000 is 1,000. Here 2,000, so 3,000 plus whatever it is going to be from 30. Okay. Optional tax regime, if they are following optional tax regime, 22% is the rate of tax. If you are following optional tax regime, they cannot claim the deduction under section 6A. Okay, the special cooperative societies deduction under section 6A cannot be claimed. Further, under the normal tax regime, there is a change in the surcharge rate for a cooperative society. It is also mapping along with company. Up to 1 crore nil, 1 to 10 crores 7%, more than 10 crore 12%. Okay. Whereas if you are opting for optional tax regime, 10%. Everywhere in optional tax regime, we know that the surcharge rate is 10%, except for 115 BAC, which is the same surcharge limit as like Finance Act. Am I clear to you? Okay, right. So for a cooperative society, I have this question to you. A cooperative society engaged in manufacturing activities having gross total income of 14 crores and also eligible for chapter 6A deduction of 6 crores. 6, your advice on the tax regime they need to opt for, whether it is normal or optional. Let's start doing it. Base tax under the normal regime. Base tax under the normal regime. That is 8 crores is the tax. First 10,000, 10%, so 1,000. Next 10,000, 20%, so 2,000. On the balance, it is going to be 30%. On the balance, it is going to be 30%. So 7 crore 80 lakhs into 30%. Repeating, 8 crore minus 20,000 into 30% plus 3,000. Plus 3,000. Am I clear to you? Suldaraja? 7 crore?
99 lakhs. 30 crore.
30, sorry. Yeah, sorry. Yeah. 10,000, 20,000. No. Up to 20,000 then, Raja. First 20,000 then, Raja. Not 30,000. Income exceeding 20,000 is okay. Whereas, if you are going for optional tax regime, of cooperative society, the rate is 22%. Okay. In the Varshanda, manufacturing cooperative societies 15%. 115 BAB order. Otherwise, in last year it is 22%. I'm not working out the other because this is more beneficial. Am I clear to you? Any doubts, friends? Any doubts? Hope it's clear. Last rows, are you following? Are you following, friends? Okay. This can come in MCQs. Okay, because there are small changes. This can hit MCQs. So let's be very clear about amendments. Questionable amendments is very clear. Okay. Shall I proceed? Yeah. Raja, you're following. Niveda, you are following. Yeah. Brothers Association and AOP declares a total income of 6 crore 10 lakhs, which includes 75 lakhs of LTCG on sale of land, 50 lakhs of LTCG on sale of shares on which security transaction tax is paid. What will be the tax payable if AOP has 3 members, one of which is a company and other 2 are individuals? which means the surcharge rate will be approximately 37%. The surcharge rate will be 37%. The second part of the question, will your answer change if AOP has 3 members, all of whom are company, including one which is a manufacturing company? That is just to make you focus elsewhere. No, it is if all the members of an AOP are companies, then the maximum surcharge rate is only 15%. The maximum surcharge rate is only 15%. In the first case, what will happen is for this 15 lakhs, it will still continue to be 15%. For this will still continue to be 15%. Okay, 6.10 minus 0.90, 75 plus 15, we still 5.20. So it has exceeded 5 crores. For this quantum, it will be 37%. Whatever is the tax coming on that, this will be 37%. Whereas in the second part, for all these three things put together, it can only be 15%. Am I clear to you? Quick working, please. What is that another point which I have to remember? On amount exceeding 1 lakh only, not the entire 15 lakhs, only 14 lakhs into 10%. Okay. No, this is taxable at 30%. Sorry. This is taxable at 30%, where AOP has any member who has an income taxable, then AOP is taxable at 30% and the share of profit will not be. AOP as company as a member, they don't have what do you known as basic exemption limit. So AOP will be taxable at a higher rate.
income exceeding 10 lakhs or 5 lakhs.
For an AOP, the tax rate depends upon the members. If none of the members have the income exceeding basic exemption limit, then AOP is taxable at slab rates, but the share of income is taxable for the members. Where any of the member has income taxable at slab or any of the members has income taxable, then it depends upon whether the members' shares are determined or not determined. If it is not determined, maximum marginal rate, everything will be maximum 30% plus 37% surcharge plus 4% HEC. The only difference it will undergo if all is a company is every surcharge, there will not be extra surcharge, it will be only 15%. The maximum surcharge will only be 15%. You start your answer from the basic tax rate, I mean total base tax. From there, if you start, it will be simple, though I am copying it entirely. Please remember, one of the tax rate amendment can be at least the MCQ for you. At least an MCQ, one of the tax rate amendment. Shall I move on? Okay. The next amendment came in section 68. The next amendment came in section 68. One. There was one particular case law which I was searching for. Okay. Suppose a firm gets money from the partners. A firm gets money from the partners. partners were unable to explain the source of getting that money. But the firm said that, look, I got the money from the partners. The assessing officer proceeded against the firm. Is it correct? Saying that there is an unexplained source of income under section 68. Is that correct? The judgment of the High Court was it is not correct. The firm has explained the source. The source for the firm is partners gave the money. The partners were unable to explain the source. Only partners can be proceeded and not the firm. Okay, this is the case law of Venkateswara Rao. Okay, where the judgment was given so. Okay, the judgment is overruled by the amendment now. The judgment is overruled by the amendment in section 68. My dear friends, let me first tell you what is 68. Where any sum is found is credited in the books of the assessee maintained for any previous year, and the assessee offers no explanation about the nature and source of is not satisfactory in the opinion of AO, the sum so credited shall be treated as income of the previous year. This was the law. They asked me, they sent me notice asking me how come I got the credit. I told that the partners gave me loan or partners brought in capital, etc. They were unable to get the source from the partners, so they proceeded against the firm. High Court held that the notice is invalid and you cannot proceed against the firm. Okay, the law now, the amendment that came into unexplained loan and borrowing, where the amount credited in the books of the assessee is recorded as loan or borrowing or by whatever name called, the current account, capital account, and the person from whom it is received fails to offer satisfactory explanation as regards the source of such income, which is provided as loan or borrowing, then the same shall be treated as income of the receiving entity. It is not the partner, it is not the person, it is for the receiving entity, that is the firm. Now it can proceed against. Two conditions needs to be satisfied as regards loans and borrowings founded. The person who provided the sum should offer sufficient explanation as regards the source, and the explanation should be to the satisfaction of the AO. So this rules out M. Venkateswara Rao case law. Okay, that case law is superseded now by this particular provision. Am I clear to you? Okay, right. A similar provision was there for company also. For the company, if the person who is contributing the share money is not giving them the valid explanation, if the person who is contributing the share money is not giving a valid explanation, then we will be proceeding against the company. We will be proceeding against the company. This year, amendment to give relief for joint venture company, venture capital funds were given. However, the said provision is not applicable if the provider of the money is a venture, because they themselves collected from a third party and give it to us. Okay, so it is not applicable if the provider is a venture capital fund or a venture capital company. I don't see unexplained share money amendment big, but this is big. This is a bigger amendment. This overrules a particular case law also, M. Venkateswara Rao case law. Okay, 3 or 4 case laws are overruled by the amendment. Okay, which I will keep on telling you. Okay, one of the case law overruled is this particular aspect. Okay, right. So remember this. There are no major amendment in the residential status or walking across. As I told you, 9 eligible fund manager, we will check it out later. There are some investment criteria, 100 crores, how it needs to be calculated, etc. Okay, if I move on from there, Okay, if I move on from there to the chapter of salaries, if I move on from there, now I am entering the income heads. Now I am getting, there is an amendment in section 14, which is only a technical amendment. We all know about the importance of when the income is not taxable, expenditure will not be allowed as deduction. 14A amendment is very simple. When the income is not taxable, expenditure will not be allowed as deduction. The amendment says expenditure incurred in the previous year, okay, in relation to an exempt income would be disallowed while computing the total income by applying the provision of 14A, even though such exempt income has not accrued or arisen or has not been received during the previous year. இன்கம் அக்கவுண்ட் பண்ணாதான் எக்ஸ்பென்சஸ் டிஸ்அலவுட்னு இல்ல. இன்கம் எப்போ பண்ணினாலும் அது எக்ஸம்ப்ட்னா the expenses relating to such income also cannot be allowed in any of the years. So that is the small amendment, purely technical amendment, nothing to do. In the salaries chapter and in the income from other sources chapter, my dear friends, in the salaries chapter and in the income from other sources chapter, there is one relative amendment which happened. That is for COVID-19 treatment. That is for COVID-19 treatment. This particular amendment happened. Right. In the salaries chapter, what is the amendment? The amendment is with regard to medical perquisite. Normally, whatever is the medical perquisite, it is taxable in the hands of the assessee. What is a perquisite? Employer incurs, that is, he directly pays to the hospital or reimburse, okay, expenditure on treatment of employee and his family members. It is treated as a perquisite in the hands of the employee and it is taxable. Till last year, the exemptions were like this. For if the treatment is in a government hospital, no perquisite, it is not taxable. Treatment is in an employer-owned hospital, Sundaram Medical Foundation or TI Cycles as their own hospital, like that. Okay, it is not taxable. If the treatment is for specified diseases, you need not remember what is specified disease. All terminal, the cure being lesser, cancer, lung, kidney, okay, in these cases, the perquisite is not taxable. Due to the condition of the patient has to be taken outside India, then also it is not taxable. Then also it is not taxable. Even the travel expenses of a patient and one attendant will be exempt, provided it is within the RBI limits. Okay, and all type of group insurance policies, personal accident policy, group policies, these are not taxable. So till last year, there were 5 exemptions: government hospitals, employer-owned hospital, specified disease, treatment outside India, and medical insurance premium. Then came the COVID. Any illness due to COVID, if the employer incurs the expenditure, incurs or reimburses, it will be exempt. It will not be treated as a perquisite in the hands of the employee, provided Raja issue panika notice, provided the treatment is in a period of 6 months from the date of testing positive. 21 la எனக்கு கோவிட் வந்தது, இப்போ ட்ரீட்மெண்ட். Okay, I am not ruling out the complication. There are many people who are having lot of side effects also, depending upon the intensity with which they got affected. They are, but central government notification has said a streak of notifications are issued in this particular aspect. One of the notifications for employees say within 6 months the treatment should have been made. For those things only I am going to give you the expenditure, and you should produce all the documents. Okay, already 192 la நமக்கு ஒரு provision இருக்கு, where if the employee is claiming any benefit, employer is his assessing officer, he should verify. Okay, now the added role for employer is this particular. Okay, right. In respect of illness relating to COVID-19, subject to the guidelines given by the central government. So they issued this notification. This is a bigger notification. The continuing part will be in IFOS. The COVID-19 positive reports of the employee or family members or medical report if clinically determined positive through the investigation or through. So this has to be maintained by the employee. All necessary documents of medical diagnosis or treatment of the employee or family members or illness related to suffered within 6 months from the date of declaring positive. Okay, so okay, the expenditure will be only for 6 months. இத 1920 2021 ல கொண்டு வந்ததால இத யூஸ் இருக்கும். இப்போ கொண்டு okay, a certification in respect of all expenditure incurred on the treatment or illness, and the term family means spouse, children, dependent parents, brothers and sisters. Please read through the last part once. Once the word dependent comes, it is all for everybody. A spouse and children, whether dependent or not, dependent parents, dependent brothers, dependent sisters. Am I clear to you, my dear friends? Okay, right. Compute the exempt quantum and taxable value of perquisite in respect of medical facility received by Mr. Ganesh from his employer during 22-23. Treatment of Mr. Ganesh from his family doctor. It is taxable. Please remember, only 6 cases of exemptions now. Treatment of his wife in a government hospital. Treatment of his grandfather in a hospital owned by employer. Taxable because not a relative. Relative employee and his family members. Family members means spouse and children, whether dependent or not, dependent parents, dependent brothers, dependent sisters. treatment of his mother dependent by a family doctor taxable. Treatment for COVID-19 for his dependent sister in a nursing home. She was diagnosed in May 22 and the treatment was done immediately. It is exempt. It is exempt. Dependent sister is a relative. The amended law says within 6 months. So May 22 she was diagnosed and immediately treated. Where the employer incurs the cost, it is exempt. Treatment for his non-dependent brother, taxable. Treatment for his father. The patient was diagnosed in April 21 and treatment continued till December 22. During 22-23, 1,60,000. This will become taxable because only 6 months treatment expenses are allowed. Only 6 months to April 21. So 6 months, beyond 6 months, whatever is the treatment expenses are taxable. The central government guideline says from the date of diagnosis for 6 months, whatever the employer incurs, you will get the exemption. The other part will become taxable. Okay. I don't find this as a question from salary, but IFOS we will deal with it more, okay, where I feel that either as a MCQ or as individual's question assessment of individual, there is more possibility. From salary, I don't see a possibility for you.
No, in the hands of company, the reimbursement amount
will be allowed as a deduction. It's not a personal expenditure.
whether it is exempt in the hands of
Yeah, irrespective of how the treatment in the hands of the employees. Okay. House property does not have any amendment. That leads us to PGBP. That leads us to PGBP. Okay. Small amendments in section 35, more to do with the administrative part, but so what I would say is slightly harsh on the part of the department to make this amendment, but this is the amendment. You know, the scientific research institutions, associations, all have to file their information with the income tax department within prescribed time, and also give donor the receipt, okay, along with the date of particulars, etc. Suppose if they fail to file the return or fail to give the receipt to the donor, deduction cannot be claimed by them, by the donor. Deduction cannot be claimed by the donor. Before going into this, I want to ensure one more thing to you. Normally, Scientific Research Association, any donation given to Scientific Research Association, 100% will be allowed as deduction. Suppose after giving donation, the approval for the research association is withdrawn by the government. Repeating, after giving donation, the approval to the respective research association is withdrawn by the CBDT, then also your deduction will not get affected. Then also your deduction will not get affected. Okay, look at this point. Okay, this is in my material. Will the approval or will the withdrawal of approval to the institution or association affect the claim of deduction? Contribution to external agency will be allowed only if it is made to an approved institution or association. The law has clarified that deduction shall not be denied merely on the ground that subsequent to the payment, approval granted to the association, university, college or institution is withdrawn. This is one side provision which is still there, my dear friends. This is dynamic. But what is the amendment saying? The amendment saying 100% donation will be allowed for research association, institutions, public limited companies and others. Section 35(1)(a) mandates that these research institutions to file prescribed statement for every period. They are also required to furnish to the donor a certificate specifying. Okay, இப்பெல்லாம் இது 26 ASலயே வந்தது that you are donated to so and so agencies name. Amended provisions of 22 Finance Act 22 specifies that deduction with respect to the donation given by the assessee to any research association, university, college or other institutions or the company would not be allowed unless such university, association, etc. complies with the requirement mentioned in 35(1)(a). Complies with the requirement. In short, deduction will not be allowed if the donor institution fails to file statement of donation or fail to file the receipt. It's like 26 As. TDS katlena, you are only under problem if it is not reflected. It is same manner. If they fail to file their returns, deduction will not be allowed to you. Am I clear to you? Am I clear to you? Okay, right. Well, let me tell this story to you. For those friends who have attended their regular batch, it will be a repetition, but just to make you understand what happened. In the year 2016, CBDT came out with the first circular saying any benefit provided to medical practitioners, okay, will not be allowed as deduction. Any freebies, even samples or anything that is provided to medical practitioners will not be allowed as deduction. This is a circular issued by CBDT. This circular was challenged by Confederation of Indian Pharmaceutical Industry. saying it is our general practice to issue or to provide benefits or freebies to medical practitioners. It is a means of our sales promotion or business promotion expenditure. In the High Court, they lost the case. They said no, the High Court said no. When there is ethical practices, when there is code of ethics, the Indian Council of Medical Research, which issued code of ethics, has said that doctors should not get any freebies, any benefit, etc. from pharmaceutical companies, and which in turn prohibits pharmaceutical company to give such things. When it is given, it will not be allowed. One of the companies in the pharmaceutical sector, Apex Laboratories, went to Supreme Court challenging that High Court judgment. Challenging that High Court judgment, saying that Pharmaceutical Association stopped there. Apex Laboratories went to Supreme Court saying that it should be, this is a general practice of our business. Apex Laboratories Supreme Court judgment and the amendment in the law were together this time. Normally judgment கொடுத்தோன்னு நாம அதை nullify பண்றதுக்கு தான் amendment யூஸ் பண்ணுவோம். பட் இந்த வாட்டி நமக்கு ஃபேவரபிளா அமைஞ்சுதுன்னா let's go ahead with the Supreme Court. Okay, so what does that Supreme Court judgment say? The incentives given by pharmaceutical company to the doctors has a direct result of exposing the recipient to the odium of sanctions, leading to a ban on their practice of medicines. Okay, code of ethics ke against. Okay, namakku irukku idella. CA Institute also has code of ethics. ஆடிட்டிங்ல ஒரு 10 மார்க் கிடைக்கும்னு நினைக்கிறேன். அதை பிராக்டிஸ் பண்ணதுக்கு இல்ல. ஓகே, those sanctions are mandated by law as they are embodied in the code of conduct and ethics, which are normative and have legal binding. Pharmaceutical companies, that is provider, was prohibited as far as they received by the medical practitioner as concerned. Medical practitioners were forbidden from accepting these as a gift. Thus, pharmaceutical company giving freebies is clearly prohibited and not allowed as a deduction. Iduடைய flip side ஒன்னு சொல்றேன். This is income for the recipient, even though it is prohibited by law. Okay, even though it is prohibited by law. Okay, நம்ம இப்போ we have come to that level of taxation, which is what I always feel correct. I have been shouting at the top of my roof, income tax law should not worry about legality. நீ income earn பண்ணா tax பண்ணிடணும். நான் எதுக்கு லீகல்? இப்பதான் நம்ம virtual digital asset, அது லீகலா இல்லையான்னு மிச்சம் யாரா பாத்துக்கிட்டோம். நீ income earn பண்ணியா tax பண்ணு. In the recent budget, online games. Okay, every state government is trying to take their own stand. எனக்கு அதை பத்தி கவலை இல்லை. இன்கம் earn பண்ணியா ராஜா? நான் கடத்தினா இன்கம் வந்ததா? கிட்னாப், ஓகே, யூ ஹைஜாக்ட், கிட்னாப்டு, ஸ்மகிள்டு, எதாவது எனக்கு இன்கம் earn பண்ணா டாக்ஸ் பண்ணு. அதர் லாஸ் லெட் them take care of you. So now, even though it is, friends, when I am doing the tomorrow, day after tomorrow, TCS 194, TDS 194R, the words are there. I am not bothered whether you received the income, whether that is income in your hands or whether it is an allowable expenditure in the hands of the person who is paying it. You have received it. You pay the tax for that. ICMR might cancel your registration. ஆத்தம் வருத்தப்படுறேன், பட் அதுக்காக டாக்ஸை நான் போர்கோ பண்ணு. Okay, so now we are taxing this. Okay, so that is the flip side. So for the pharmaceutical company, yes, similarly an amendment came in section 37, general deduction. An explanation was given. Before going into this, I don't know where from they got this. Sometimes penalty means violation of any law. Okay, any penalty will be disallowed. இது எல்லாருக்குமே தெரிஞ்ச விஷயம் தான், இது ஒரு பெரிய இது இல்ல. If I violate a foreign law, we were arguing that it is not law of India that I violated, so I should be given the benefit. That expenditure you should not disallow. So explanatory circular started from there. Okay, the expression would include, deemed to have included, not only prospective but retrospective also. Expenditure for any purpose which is an offense or prohibited law in India or outside India. The third point முடிச்சிட்டு second point வரலாம். Expenditure on compounding of offense under any law which is prevailing in India or outside India. In the compounding of offense we already have this builders case where they constructed the third floor millennia developers property and paid compounding fees. Compounding fees or regularization fee does not mean that you are making it legal. It is a penalty which is paid. So whether it is paid in India or outside India against any law, it is disallowed. Now the second point, expenditure which results in any benefit of perquisite in whatever form to a person whether or not carrying on business or profession, and acceptance of such benefit or perquisite by such person is in violation of any law, regulation, guideline as the case may be for the time being in force due to conduct. Okay, okay, so this is disallowed. இதுக்கு எக்ஸாம்பிள் கொடுக்கறேன்னு டாக்டரே கொடுத்துட்டாங்க. This is part of circular, this example. For example, expenses incurred in providing freebies to medical practitioners by pharmaceutical and allied health sector industry. CAP scan case, referral fee paid to doctors. The scanning center paid referral fee to doctors. Sir, across the account pay check la kuduthe sir. I have deducted tax also. That means it is legalized. It is an illegal expenditure. Okay, prohibited. Allied health sector industry or in violation of the provisions of Indian Council for Medical Regulation. Hence, such expenditure is considered to be expenses prohibited by law and not allowed in the hands of the pharmaceutical company or other associates. Am I clear to you? Okay. Most probable question la idu irukku. Most probable question. Adjustment. One of the adjustment could be this, because surely 194R is definite. Okay. Section 194R is going to be definite. Even if they miss it out on PGBP, they are going to question it on 194R. Okay. Because again, this is the pharmaceutical company. Okay. Which has to deduct tax at source. Okay. Except including the person who issued that circular, no yarku adu puriyaliya. They are trying to understand the circular more clear. Okay. Am I clear to you? Apro or case law which said income tax is only disallowed. Surcharge and HEC can be claimed. Okay. So any payment under this law ne irukku sir. The wordings is there. So now they have given the explanatory saying that okay, the term tax would include and would be deemed to have included any surcharge or cess by whatever norm clause. Okay, include and deemed to have included. So even a retrospective amendment. Okay, right? As soon as the first term of this government took over, they promised we will not make retrospective amendment. Okay, okay. Hence, tax including surcharge and cess will be disallowed. This is okay. This simple. Aqua, Supreme Court judgment, which is overruled now. But I feel law is right. We have a general provision, that my interest is outstanding, sir. Section 43B says, if my interest is outstanding, it is a statutory payment and it will be allowed as a deduction only if it is paid within the due date of filing returns. This they have said. The second clarification, explanation given by where the interest is converted into a term loan. Where the interest is converted into a term loan, please understand, such a conversion will not be treated as payment. Such a conversion will not be treated as payment. Only when the term loan is repaid or the installments are paid, you can take the deduction. இன்னொரு இடம் இருக்கு, இன்னொரு கேஸ் லா நம்ம பார்த்திருக்கோம். Bank guarantee provided, will it be treated as payment? Bank guarantee for some tax or due, sales tax is due as on 31st March, which I have claimed it as an expenditure. To the department I have provided bank guarantee. No, the terminology used in 43B is payment. It should have been paid within the due date. Does not be, there should be a physical cash outflow. Okay. Shawsun Chemicals no or case law la, bonus was due as on 31st March. The employees were under strike saying that the bonus is not sufficient. The due date for payment of bonus is coming up, the income filing of return. So I transferred the fund to a employee staff welfare trust. Settled. The case was settled. From there I paid the bonus. Income tax department contended that you have not directly paid to the employees, so I will not allow it as an expenditure. Court said ultimately employees are benefited and ultimately it is paid within the due date from the trust account. So the interpretation given by our CA Institute is the trust should have also paid within the due date. I transferring to trust illa, trust should have ultimately paid to the beneficiary within the due date. இவ்வளவு கேஸ் இருக்கு, இவ்வளவு explanation இருக்கு. MMAQUAல loan was converted into debentures. Interest, outstanding interest was converted into so some outstanding interest, the company issued debentures to him against that and MMAQUA said it is allowed as deduction. In that case law they said it is allowed as a deduction. The law was amended. Explanatory amendment in Finance Act 22, where unpaid interest gets converted into debentures or any other instrument on which liability to pay is deferred to future date, it will not be considered as paid. Such a conversion will also be disallowed, considering as not paid and then allowed in the year in which the debentures gets paid. Okay, right. The 4 amendments in PGBP chapter. The first is section 35, scientific research, they should have filed the return. The section 37, which is the major amendment, pharmaceutical sector affect pandra mariyo. Offences penalty includes offences both in India and outside India. Section 40 subsection A is even surcharge and HEC will be disallowed. Okay, and 43B amendment, if debentures are converted, if the unpaid interest is converted into debentures, it is not taken as paid, it will be this. Am I clear to you? These are all the 4 amendments. இது அட்ஜஸ்ட்மெண்டா தான் வரும் ஒரு மெயின் கொஸ்டின்ல. It will not be a standalone question. In the main question, one of the adjustment should be the amendment, not a bigger amendment. But the 37 amendment is bigger, but it has a relativity with 194R. So 194R is more questionable in this. Taking all the amendments into a practical question, let us try. when I do, I try to touch upon the other provisions also. அப்படியே நம்ம recollect பண்ணிட்டே வரலாம். Don't worry about anything. If you are unable to recollect, I will tell it now. I will tell it in revision class also. If you are unable to recollect, absolutely not a problem. Okay, your fear ஒரு மைண்ட் பிளாக்கோ வேணாம். ஒரு 50 கொஸ்டின்குள்ள தான் வரப்போகுது, அதுக்கு மேல ஒண்ணுமே கிடையாது. I can assure you that. ஓகே, அந்த 50 கொஸ்டின் நம்ம அதுக்குள்ள ரிவிஷன் செஷன்ஸ்குள்ள அந்த 50 கொஸ்டின்ஸையும் நம்ம முடிச்சிருப்போம். அந்த 50 கொஸ்டின்ஸ்குள்ள தான் நம்மளுடைய ஃபைனல் பேப்பர் வரப்போகுது. So do not worry, just have the confidence that we will break it very easily this time. X Limited is engaged in the business of manufacturing and selling pharmaceutical product. Its net profit is 1 crore 75 lakhs. Payment to 2 employees 7,50,000 each in connection with VRS. So only 1/5 will be allowed, 4/5 will be disallowed. Section 35 DDA says VRS compensation will be allowed in 5 equal installments. These you just recollect. நீங்க மறந்தாலும் பரவாயில்ல, don't worry. In the classroom we will recollect. Interest on loan to pay advance tax 10 lakhs. Interest on payment of interest on loan taken for paying income tax takes the character of interest on income tax. Okay, so it will be disallowed. Okay, surcharge and HEC of financial year 21-22 were paid and the company has been regularly claiming this as an expenditure. This is the amendment. This cannot be claimed now. So, charges of 2 lakh paid for advertisement in the souvenir published by the political party registered by the election commission. This will not be allowed. This is not a business expenditure, but you can claim 80 GGB. Contribution to an approved scientific research association in May 22. In March 23, the recognition provided to the said institution is withdrawn. It is allowed. On the date of giving the contribution, the recognition was live. Later only 143 subsection 3 scrutiny assessment la there are 2 proviso. Proviso 1 is with regard to income computation, scrutiny assessment, which is applicable for all assessees. Proviso 2 in the Scientific Research Association news agency, ivangalukkalame, for them it is not an income computation provision. I have given the exemption for them based upon some conditionalities, trust mari, based upon some conditionalities, whether they have fulfilled those conditionalities. Whether they have fulfilled those conditionalities, that is the reason for that particular. So inga vandu anga it will take a longer time to withdraw the recognition. Meanwhile the amount provided will be contribution to statistical research. The receiving institute fails to provide of their filing information. This will not be allowed. This is the amendment. Interest on term loan amounting to for the year 22-23 amounted to 8,10,000. This, along with past years' interest, were converted into 10% debentures. So this will be disallowed. It has not been paid within the due date of filing returns. This will be disallowed. Working capital loan waived by the bank. It is an income. Okay. Working capital waiver of term loan is not an income. Waiver of interest, no adjustment, because that year you would have done it. Whereas waiver of working capital loan is an income. Company has incurred 14,10,000 towards travel expenses of director. Disallowed. Company has provided to various hospital free samples. Disallowed. Gold coins provided to hospitals, in turn benefiting. All these 3 things disallowed. 194R la இது எல்லாத்துக்குமே நான் டாக்ஸ் படிக்கணும். எனக்கு disallowance அப்படின்றதுனால I need not deduct நினைக்க கூடாது. For the receiver it is income. 194R ல சொல்லும்போது how the law says I pay directly to a doctor. The doctor is the beneficiary. I need to deduct tax at source 194R. I pay to a hospital in which this doctor is an employee. Okay, 194R is applicable. Either the doctor or the hospital can show it as income. I pay to a hospital where this doctor is a consultant, not an employee. Visiting doctor, consultant. Taxable in the hands of the doctor, 194R is applicable. I'm just giving you the prelude here so that when we discuss 194R, you will be more clear. Whether it is paid to the doctor directly, to the hospital where the doctor is an employee, or to the hospital where the doctor is a consultant, 194R is applicable, and in this case the expenses is disallowed under 37. Interest paid under 234B disallowed. Dividend from a foreign company, this is taxable, though their relative amendment is in assessment of company. Till last year, there was a section called 115 BBD, 115 BBD. Foreign company lane dividend it was taxable at a lesser rate of 15%. That section is removed now. That section is scrapped, which means it is taxable at normal rate. Specified foreign company, 26% of the share if I hold it. Okay, that section, intention of that section is to bring money into India. That foreign company has earned the profit. You are a major shareholder, at least a substantial interest holder. Let them give dividends so that you bring it into India. So I was having the rate lower, but our Indian companies, domestic companies got affected because of that. Now it is neutralized by removing that section. There it is also taxable at the same rate. Compute the total income. Also compute the tax payable assuming the company has opted for optional tax regime under 115 BAA. அந்த 80 GGB claim பண்ண முடியாது. That 80 GGB I cannot claim. Scientific research expenditure I cannot claim. Okay, 100% expenditure on contribution to scientific research I cannot claim. Okay, so if 115 BAA, BAB is for manufacturing company, new manufacturing companies. Okay, so in this case 22% plus 10% plus 4%. Okay, let us start computing the total income. First I will do normal provision. I'll show you first the normal provision, then I'll tell you what change 115B optional tax regime undergoes, so that you will be more clear. On the flip side, you can disallow 12 lakhs also. I don't mind. சொல்லுங்க சார். Just a minute. Please state the obvious in the examination. Write a detailed answer. Consider that you are teaching the examiner and write the detailed answer. Don't stop with just amended provision is disallowed. No, you should write a detailed answer. Then only our paper will be valued better.
Which section numbers we have to quote in the.
Sir, major section numbers you will remember, sir. Otherwise, section number को mark को संबंध नहीं है, sir. Let me know if you don't understand any of the points. I will give you an explanation. Scroll up. Sir, it is an income, sir. I assume that it has been credited to P&L because no, so I am not making any adjustment. If it has not been credited to P&L, I would have added up that.
So we have to mention our assumption there.
Yes, sir, very much yes. It is an examination adjustment where they mentioned the adjustment also. டேர்ம்ல வேல்யூ ஆஃப் பண்ணா அசட்டோட வேல்யூவோட ரெடியூஸ் பண்ணிடணும். ஏதோ ஒரு அசட்டுக்கு தானே அதை கொடுத்துருப்பாங்க, அந்த அசட்டோட வேல்யூவோட அதை ரெடியூஸ் பண்ணிடணும். Yeah, capital receipt na against something. Yes, sure. மிஸ் பண்ணிட்டீங்களா? அதாவது you're clear? Shall I, friends? If I am following 115 BAA, how this income changes? Okay. For example, I take the same total income. Okay. I add back deduction under section 80 GGB 2 lakhs. I will add back scientific research expenditure, okay, which I contributed 5,50,000 to scientific research expenditure. That also I add back. There is no other deduction. 35 AD is not there. Any of the skill development expenditures are not there. Okay. I have not claimed any exemption under 10 AA and all. So this will be the total income under optional tax regime. May I? May I? I just want you to remember one point. That's why I. Okay, you need not go to this page, but remember here I will tax it at 22%. Suppose if it is BAB, I want you to remember this somewhere. Business income da 15%. இதே question, if it is a new manufacturing company after 1st October 19, their business income is 15%. And the dividend இருக்குல்ல, that would be taxable at 22%. Only business income they have this okay advantage of 15%. BAA na everything is taxable at 22%. Whereas manufacturing companies, new manufacturing companies after 1st October 19 opted for optional tax regime, you have to segregate their income from that manufacturing activity, that is that business income which is taxable at 15%. Any foreign dividend income, interest income, house property income, all those things will be taxable at 22% only. In this case, that problem is not there, but generally I want you to remember that. இந்த இடத்துல டிசைட் பண்ணிடாதீங்க. நம்ம ஆப்ஷன் ஏன்னா சர்சார்ஜ் ரேட் வந்து 7%, 10%. Sometimes if the income is less than 1 crore, in the normal tax regime surcharge வராது. ஆனா optional tax regimeல surcharge வரும். So go up to the end. Okay, individualsக்கு தான் நீங்க base tax levelல decide பண்ணிரலாம். But here you cannot decide it in base tax level. At that level only you should say that it is okay. Depends upon next year, all those things, but are you understanding, friends? Okay. As far as PGBP is concerned, whatever amendments we saw might come as adjustments. One adjustment or two adjustments will have that, especially this medical sector. Be sure. One of the question as for in the salaries PGBP, all these capital gains amendment are of no big importance. This is just a amendment which says that 331 is the index factor. Okay. With regard to ULIP, we will speak about ULIP again for this. I will take for you ULIP, don't worry. Okay, as to how to compute the capital gain. Okay, non-resident IFSC based exemption, we will see it when we are doing IFSC. And there is one adjustment in 54 number slum sales la, instead of the word sale they are using the word transfer. Okay, so capital gains adjustments are not at all there for this. You can take it as zero adjustment. That takes us to the most important area of adjustment is income from other sources, especially the two adjustment. Both the adjustments are questionable area. The second adjustment I take it as IFOS. Okay, but I'll go from the second adjustment and come to the first adjustment. There is something known as bond washing transactions. Bond washing transactions. What is a bond washing transaction? If, for example, let us take that I am taxable at 30%. My friend Mayamai is not taxable. She is just doing her articles. So auditor does not pay me. Okay, does not cross the basic exemption limit. So her income is below basic exemption limit. I have some 10% debentures of, let us take them 50 lakhs, which means I will get 5 lakhs as income and I am taxable for 1,50,000. I do one thing, I transfer it to her. Before the record date, I transfer it to her. She will receive up to 5 lakhs. We know how to, there is not going to be any tax. Okay. After that, I buy back the same debentures from her. This is known as bond washing transaction. Literally இத வந்து clubbing provisionலயே எடுத்துருக்கலாம். Okay, I transfer the debentures or bonds or any other instrument before the date of interest and purchase back the same. I will be, it is the transferor, the income will be clubbed in the hands of the transferor. It is not transferee, it is transferor which is going to be taxable. This is in section 94(1). Okay. When dividend was taxable only in the hands of the company and not in the hands of the shareholder. A couple of years back, there was something known as similar to known as dividend stripping transaction that is not there now. But then, now in this year, this bonus stripping is becoming an important amendment. This bonus stripping becomes an important amendment. Every company has something known as record date. Record date is for sending AGM notice and the dividend issue of bonus shares. So something known as record date. Okay. 3 months before the record date, I purchase the shares of the company. 3 months before the record date, I purchase the shares of the company. On the record date, they announce bonus. They announce bonus. 9 months after the record days, these shares are sold by me, but the bonus is still with me. We all know once the company issues bonus, the share value is going to come down. Once the bonus is issued. So there is a loss. Obviously, it will be a short-term capital loss only because it is less than 12 months. 3 months before, 9 months after. Okay. So there is a short-term capital loss. Now this loss cannot be set off or carry forward and set off. Now this loss cannot be set off or carry forward and set off. Okay. Part A of the provision. Part B, அப்ப இந்த loss என்ன சார் பண்றது? This will become the cost of acquisition of bonus shares. This will become the cost of acquisition of bonus shares. When you sell the bonus shares, reduce it. Normally COA of bonus is nil. Normally COA of bonus is there. I am stripping off the bonus, okay, the loss that is arising. So this is known as bonus stripping, which is brought around in 94(8) of the law, section 94 subsection 8. Okay, since it's a new amendment, new introduction, most probable question. Repeating, I should have purchased the shares 3 months before the record date. I should have sold those shares 9 months after the record date and I should retain the bonus shares. The transaction has resulted, the sale has resulted in a loss, which is obviously short-term capital loss. It cannot be set off or carry forward or set off. It should be ignored. Then what happens to that? That loss becomes the cost of acquisition of the bonus shares. When subsequently the bonus shares are sold, this can be taken as cost. Is the class clear? Is the class clear? Now, sorry, I'm going to the first other mudichittu, I'll come to gift provision. We know what is bond washing. 94(8) concept of bonus stripping. Where any person buys or acquires any securities within a period of 3 months before the record date. Okay, securities are purchased 3 months before the record date and he is allotted bonus securities on the basis of holdings on the record date. Such person sells or all or any of the securities which he has originally acquired but continue to hold. Here is the important point. All or any bonus securities. எல்லா bonus shares நான் வச்சுக்கணும்னு அவசியம் இல்லை. The company allotted to me 300 bonus shares. Out of the 200 bonus shares also I sold. No problem. You still have 100 bonus shares. You still have 100 bonus shares. Then the loss arising from such sale of securities shall be ignored, and such shall be considered as cost of acquisition of the bonus shares. Am I clear?
So that the loss will be taken as the cost of acquisition. Say, like you said, 300 bonus shares, 200 we are selling, 100 we are having. The entire loss will be taken as a
Cost of acquisition of 100 shares.
Entire loss.
Entire loss. Even if I am retaining only one bonus share, also entire loss is for only one bonus share. Because law has used the word all or any. It will be considered as cost of proportionate bonus share cost allocate பண்ண சொல்லல. Whatever is the loss should be allocated to the remaining bonus shares with you.
So the time period of 3 months, it has to stick up.
Yes sir. Yes sir. It should be short term sir. அப்பதான் இது இந்த 3 9 இருந்தா தான் சார் அது ஷார்ட் டேர்ம். முன்னாடி போனஸ் ஸ்ட்ரிப்பிங்கோ இது டிவிடெண்ட் ஸ்ட்ரிப்பிங்கோ இதாதான் 3 9 தான். ஒரு ஷேர்ஸ் வாங்குறீங்க முன்னாடி அந்த ப்ரொவிஷன் எப்படி இருந்ததுன்னா இஃப் யூ ஆர் பையிங் ஷேர்ஸ் 3 months பிஃபோர் த ரெக்கார்ட் டேட் யூ ஆர் ரிசீவிங் டிவிடெண்ட் 9 months ஏன்னா அப்ப டிவிடெண்ட் எக்ஸம்ட் இன் த ஹேண்ட்ஸ் ஆஃப் த ஷேர் ஹோல்டர் 115 கட்டிடுவாங்க. ஓகே கம்பெனி 9 monthsக்குள்ள அந்த ஷேர்ஸை வித்தா there is a short term capital loss that should be adjusted with the dividend received by you because your intention is to get the dividend. So that is known as dividend stripping. Dividend stripping na normally dividend is not taxable. In this case the short term capital loss will be adjusted with the dividend. அதுதான் dividend இப்ப கிடையாது அந்த provision because dividend is taxable in the hands of the receiver. So now it is bonus stripping. My dear friends, most probable questions la இதுவும் ஒண்ணு. ஓகே ஏன்னா ஐஎஃப்ஓஎஸ்ல தான் இந்த வாட்டி எய்தர் இண்டிவிஜுவல்க்கு அசஸ்மெண்ட் ஆஃப் இண்டிவிஜுவல்ல இங்க தான் இதுல தான் வரும்னு நான் நினைக்கிறேன். Okay, I'll complete the question also and go to the other one. Question on bonus stripping. Bharatwaj purchased 1,000 shares of PC Limited in August 22 for rupees 200 per share. In September 22, the company allotted 1 share for every 2 shares held. So it is purchased before the record date and you got the bonus. In the following circumstances, specify the tax treatment. Case A. In March 23, that is within 9 months, September and March kulla, 1,000 shares are sold for 180 per share. Is this clear to you all? Are we understanding? Okay, right. If 1200 shares are sold for 160, ஒரு எக்ஸாம்பிளுக்கு கேட்கிறேன். இப்போ 1000 shares I have sold for 180. Can the assessee say, no, no, I sold 500 bonus shares and 500 original shares? Can the assessee contend so? That's it. The law has said FIFO basis only. The law has clearly said FIFO basis only. அதுவும் இப்ப டிமேட்டட் பண்ண அப்புறம் எல்லாமே FIFO தான். You don't have the option of saying that. Am I clear? In March 23, 750 shares for 175. The 250 shares with you, you have only sold 750. அதோடைய லாஸ் எவ்வளவோ அதான் காஸ்ட் ஆஃப் போனஸ் ஷேர்ஸ். அங்கேயும் ப்ரொபோர்ஷனேட் கிடையாது சார். 3/4 of the காஸ்டா இல்ல. That is the cost of bonus shares. That 250, let it be 200. Am I clear? Is this clear to all of us? Okay, all right. If Bharatwaj has purchased the shares in April 22 instead of August 22, okay, bonus stripping concept not applicable. Okay, because 3 months before the record date, when the record date is in September, August, July, June, okay. If you have purchased it in April, you can claim the short-term capital loss of 20,000. You can claim the short-term, you can either set it off or carry forward and set it off, whereas the bonus shares will continue to be nil. The bonus shares cost will continue to be nil. Am I clear to you? Okay. Only if you fall within this 12 months range, it will be there. Okay. Continuing in case A, if Bharatwaj sells 200 bonus shares in April 23 for 150 per share and 300 shares in May 23 for 160, what will be the capital gains? Okay, I'll write the short answer for case 4 also so that we have the answer. Is this clear to you? Is this clear to you all? Okay. I'll start with the gift provision tomorrow morning. As I told you, my brothers are waiting. So I will start with the gift provision tomorrow morning at 9:30 and progress to the next level. Tomorrow, my main focus is going to be on trust. Okay. Charitable trust. And if time permits, we'll complete VDA also tomorrow itself, because after the law became, after the VDA market has crashed like anything, and internationally digital currency is becoming a question. So இப்போ அதுல question வருமானதே எனக்கு doubt தான், but let's see. Okay, we'll meet tomorrow morning 9:30. All the best, friends.